Hello, everyone. Hopefully, I can kind of keep this short today, as not much happened on my end. But the Nasdaq, as you can see, was up 0.15% today. Volume was above average, but lower than the day before. The S&P 500 also saw the market up slightly, up 0.20%. The Dow Jones Industrial Average was down a little bit, down 0.08%, and the Russell 2000 obviously led the way down, which is something you don't want to see. Normally, you'd want to see this index leading and the Dow Jones and S&P 500 lagging. But the good news is that there was a big intraday reversal today. So far, in all reality, this is like kind of day three of a rally attempt. Really, it's just day two if you consider this to be day one on the 30th. But, it's splitting hairs. If you get a big, powerful follow-through day in the next few sessions, that's a follow-through day. I don't care if we're on day 2 or 3. But when you start getting past 7, 10 days, then we start to run into a problem where the count starts to be a little bit more important. But the S&P 500, same similar situation off the lows. Third day off the lows, looking good pretty much. The Nasdaq looking good. As you can see, a successful retest with the NYSE-related stocks. The Russell 2000, of course, could be doing a double bottom, and the Nasdaq is showing relative strength compared to the old 824 lows. But if the markets can hold here, it could be a good possible floor for us to rally into in quarter four. It just seems a little too convenient this way the tape's playing out. But that is seasonality and that is history. And that's why you don't fight it. I mean, the last 2 months have been pretty ugly in the stock market, and historically, they're always the ugliest months. Going back to 1950 or 1929, they're number 1 and 2 or number 1 and 3. So this is kind of funny how it's playing out, but seasonality's working. So if that's the case, we got a couple of more weeks of probably some poor tape action to go through, and then we're in the week of October where we start to see market rallies occur into the end of the year. So we'll keep an eye out for it. Like I said, so far Nasdaq successfully retesting Russell 2000. Not really, but hey, it only broke it by a little bit, and it's not like the watershed moment continued. And the S&P 500, of course, found support right at those 824 lows. So far, everything holding up, nothing too crazy. The biggest development that I saw today was I took a look at the Investors Intelligence Survey, and I see that bears have jumped up to 35%, while bulls are at new 5-year lows at 24%. This is a significant cross. The earlier cross, a few weeks ago, or however long it was, I think it was like 3 weeks ago, it wasn't, that dramatic. I think it was like what, bears 30, bulls 28 or something like that. It was something minor. I can't quite remember. But it was very minor, and it wasn't indicative of a crowd that's completely shifted. But I tell you what, we're getting there. The bears at 35, the bulls at 25. That's a 10%, not 10%, but that's a 10-point divergence between the bulls and bears. And I can't remember it being that wide even in the 2011 lows. I could be completely wrong, but I think that we're getting to 2008 levels. So if the bears, man, that would be a perfect situation. So if the bears can increase and get to around 40%, and maybe the bulls can drop down to 20% here in the next couple of weeks, tell you what, that's the kind of sentiment that you get at market bottoms, and then we'd be in that sweet spot in October to really start looking for a rally. So keep in mind the crowd is finally bearish out there longer term, with bears at 35, bulls at 25. So I'm going to start looking for a potential bottom in this tape. Start looking to increase sizes in long positions if new long positions continue to work. Now, with that being said, today's reversal, if this was truly, like I said, if the market rally was going to start now, I've told everybody that I would already be getting solid long signals. They would already be following through. And then as we rallied on the indexes with a successful retest of the lows, we would keep on getting new long positions. Now, yesterday we got 2 new long signals. One didn't really work and reversed off its intraday highs, but it's a thin stock, and so it's a volatile play. But this one might not work, but our other long position worked extremely well, almost up 3% today. So 1 out of 2 isn't bad, and the one was better than the other one, technically closing flat overall compared to yesterday's closing price. So for now, that's a small victory for the bulls. And BNCN also, even though it gapped up, it had a big intraday reversals off the lows, actually closing higher than where it opened on today's session. So once again, excellent price action even in our ads. So that's basically 2 out of 3. 2 out of 3 ain't bad. We did have a couple of sell signals though today. More cosmetic than anything else. LHCG, I've already been knocked out of my entire position, but on an end-of-day basis, this is the second close below the 50-day moving average on above average volume before producing any meaningful gains. That means it is done. If you're still long the stock, that means your final sell stop can be 42.73 now. Or you can go ahead and keep what I would consider the final, absolute final, no negotiations sell stop level at 41.05, a move below 41.05, and I would be completely out of this stock, as a lot of these health services stock just don't look as good as they once did. And then also on my speculative side, EDUC, unfortunate failure, turning gains into small losses right now because we got filled like around 697, 698, and so now it's at 689, so we got small losses. So with it closing below the 20-day moving average, that is a 50% sell. And for me, my final sell stop now goes to today's low a day, since it's going to leave me in a loss if it crosses it. If we had gains in this stock, today's low a day would then, let's say I had 100 shares, close below 50-day moving average. If you're not, I had 50% of my sell stops below 690, so I was taking out a half of it intraday. Now let's say I had 100 shares and I was taken out of those, and with the remaining 50 shares, I now split those 50 shares up to 25 at today's low a day, 667, and 25 at the ultimate final sell stop level following our long position at 662. The issue, of course, with this stock is we don't have gains, so that's not necessary. So what I would do is I would raise your final sell stop on this position to 667. And in an excellent case of why you should never ever trade really stocks period in this, remember, the volatility of the volatility in the stock market is at all-time highs. We've never had a tape so absolutely gapping insane with such crazy intraday price action, and today that was beautifully summed up in EDAP. EDAP basically crashed about 50% at one point intraday today, and that happened to be one of our long positions. Now EDAP is a special case for me. So this was our long signal date, 378. That means that since it closed at the high day, that means I put my limit order at 1 cent above that. So 379 was my limit order. As you can see on the very next day, never hit 379. Only got down to 384, thus leaving me completely with zero position in EDAP. And then I watched EDAP trend higher without me, making me very, very sad. So at this point in EDAP, by 9/28, September 28th, my missed limit cost me 52%. Actually 50% if you take away the few cents with that slippage from the gap up. So we're measuring from. So right around 50% gain is what I would have had if I would have gone ahead and done a market order. Now, let's say I'm still long EDAP here. Where's my sell stop at following my initial order? It's right here. Be no doubt about it, 445. It's rallied so much off 445 that let's say that even after this moment right here, where it now breaks out and makes a higher level box, you have half your sell stop here at 445, and you have the rest below 384, so you get out at least break even. But once you start getting higher like this, that's when you can go ahead and move it all, obviously following this day here on this volume, because now it looks like on a short term, it's not parabolic, but it looks extended. So now that you have an extended price chart, now you can go ahead and move all your final sell stop to below here, just in case something bad happens. And as you just saw, something really, really bad did happen. And EDAP crashed hard today. Now, EDAP wasn't really a thin stock, but it was a sub $10 stock. And whenever we went long, it was a sub $5 stock. These are the kind of stocks that no matter what, you've got to trade with stops. And this is a perfect incident. If you did use stops, you got out half your position at 445, locking in profits of right around 25%? Yeah, right around 25% on that position. And then worst comes to worst, if you even have half here, on the other half, you're out at break even. Now, I know it's not nice watching a 50% gain go to break even, but it sure does beat leaving this position now if you're only using an end-of-day sell signal with a 3% loss. And even then, when you buy right and something bad happens, it doesn't hurt that much. So another lesson in the importance of stops.